Welcome back to Midcap Radar. Well, even as we speak, the market has picked up some steam. Like Vamakshi mentioned at the start of the show, it's actually the metal pack that's propelling the markets higher. Names like JSW Steel that saw significant relief come by from the Supreme Court. That stock is near the day's highest point, and that has taken along with it some of the other metal names like SAIL as well as JSPL. But the other set of stocks that are doing very well, and this is continuing for the last 3 to 4 trading sessions, has actually been the piping stocks. So, companies that are making pipes, names like Astral, names like Supreme Industries, names like Finolex, all of these stocks are actually doing quite well. This on the back of the fact that despite the company seeing a very muted Q4 as well as what has actually essentially been a very subdued FY25, in the last 10 days, there have been 2 price hikes that have been taken by players across the industry. And on the back of that, a lot of these stocks are picking up steam from the 52-week lows they were trading at. The other stock that's doing quite well is actually Trend. This particular stock is up almost 1.7%, and that particular stock too near the day's highest point. But moving on, one company that reported a subdued set of numbers for Q4 was Gopal Snacks. There has been a sharp rise in raw material prices that impacted the gross margin as well as the EBITDA. Do note Q4 FY25 saw an exceptional loss of 47.2 crore rupees due to a fire incident in the company. We are now joined by Rigan Raithatha, who is the Chief Financial Officer at Gopal Snacks. Thank you so much, Rigan, for joining us. First up, Q4 has been a tough quarter for the company. What essentially happened? Do you see some easing out as far as raw material inflation is concerned?
Yeah, so good afternoon, and thank you, Vivek, for giving me this opportunity. Yeah, so our Q4 quarters were largely impacted on account of the fire which happened at our Rajkot factory, which accounted to around 65 to 70% of the sales. So that was largely driven due to that. We had a lower set of Q4 numbers in terms of top line. And in terms of margin, yes, there has been increase in the raw material prices as compared to last year Q4, and also as compared to Q3. So there has been stiff increase in raw material prices on account of duty which was impacted, levied by the government of India in the mid-September from 5% to 25% in the palm oil.
Sure. Hi, this is Vamakshi joining in, and we understand that this time around margins were impacted, but palm oil prices have come off their highs. So where are your margins now headed from here on?
Yeah, so palm oil prices have started cooling off in Q1 of this financial year, and those things are started reflecting in our purchase basket also. So we are getting benefits of lowering of the palm oil prices as well as other raw material products like chana. And that should reflect in good margins in Q1 and the forward financial quarters also.
Can you quantify that for us? FY25, your margins were at 7.2%. So where are they headed from here on?
So I would not be able to quantify at this juncture because it's the starting of the financial year. So, but I would be saying that it should be moving upwards trajectory by another, in terms of absolute value, by another 25% or so.
Understood that. Now going into FY26, quantify, post taking into account the facility that is now back on track after the fire incident, what will be the full year revenue, EBITDA margin, as well as the profitability guidance? And if you could also quantify, I understand that that particular facility contributed close to 60%. So what was the loss that you saw in the quarter gone by?
Yeah, so for next financial year, that is FY25-26, we are looking at top line growth rate of around 18 to 20% from the base of 24-25. So we should be closing the year somewhere between 1750 to 1800 crores. That's what we are looking at. And in terms of margin, we are looking at 25% or so in terms of EBITDA growth, in terms of absolute value. And Q4, yes, there was a total loss of 110 days. And if you look at something around 80 to 100 crores of the revenue loss, which had happened in Q4 on account of fire.
Sure, and core states actually account for almost 70% of your revenue. So what are your plans to diversify beyond the core states that you're located in and where you supply? And what would be your revenue contribution from these non-core states, if I can call it that?
Yeah, so our non-core states, those are that we generally tell as a focus state. So next year, current year, there was a 17% growth, and next year, due to increase in our dealer base over there also, so we are targeting somewhere around 30 to 35% increase in the focus states. And that should help us in penetration outside Gujarat also. And within Gujarat, we are targeting to increase our services within the number of dealers. So that should also help us in increasing Gujarat sales also.
Okay, and the other question is, what is the target share of revenue that you are expecting now from larger packs? We understand that majority of the sales, in fact, 65% of the sales comes in from the lower price 5 rupee pack. So do you see revenue mix improving further?
Yeah, we are absolutely looking in increasing the revenue mix. So earlier, if you see our earlier years, we were around 75% odd or so in terms of 5 rupees packet. Now we have gradually reduced to below 70%, and we are hoping to be in FY25-26 somewhere around 62 to 63%.
Sure, and you must have heard about this deal that actually happened. CCI has okayed Temasek Holdings minority stake purchase in Haldiram Snacks. So, just like to understand from you, how does this actually impact the overall dynamics of the industry? Is there an impact that you're expecting?
Yeah, so yes, so that deal has obviously, so this snack industry is obviously growing overall as an industry as a whole, and we are expecting the growth rate in the FY25-26 and in another 3 to 4 years on an CAGR of roughly around 12 to 13%. And yes, that should help overall growth industry coming into the new players chipping into this industry.
Understood that. Now, we also want to understand, as far as marketing and advertising is concerned, what is it as a percentage of total sales? Earlier, you had mentioned that you would be introducing further marketing branding initiatives. So, as far as FY26 top line is concerned, where will that be capped at?
Current year, we have spent roughly around 1% odds of our revenue on sales and promotion. And next year, in terms of increasing our branding endeavors and more of a market presence, we are targeting to spend somewhere around 2 to 2.1% in the FY25-26 year.
And what about your capacity utilization? It was still quite low at around 30 to 40%. So when will this increase, and what would be your target capacity utilization this year? And when would you be reaching full capacity utilization?
So yes, our capacity utilization has been lower on account of we are yet to reach our 100% capacity. But see, our capacity is mainly in terms of the number of fryers which we have. So as we increase more number of SKUs, that will gradually increase in terms of more than, let's say in current year, we are roughly around 40%, and next year we are targeting to be around 47%, and year on year above 50%.
Understood that. Well, a couple of questions. Post the fire incident, what was the impact as far as the market share was concerned in the last 2 to 3 months for you? FY26, how much of that can you recoup? Secondly, you mentioned that you're looking to go ahead and increase touch points. So targeted distribution expansion, currently we believe you're at close to 852 dealers.
So we are targeting next year to be roughly around 1,000 distribution points in the FY26 financial year. And so we were able to retain all our dealers. Hardly 2 or 3 dealers went out during this quarter wherein our revenue was impacted. So fortunately, there was no dealer meet out from our distribution pattern. So we were able to retain all the dealers, and what we are looking at next year is the progressive trajectory in the dealer segment.
Well, last time around, you told us that you are at close to 8% of the market share when it comes to the state of Gujarat. Where are you currently at? Where do you expect to end FY26 at? Secondly, you said that gross profit margins are expected to increase due to the increasing share of the wafer business. So where does that stand at currently, and the target for FY26?
Yeah, so for gross margins, yes, our wafers business currently accounts of around 11% of our mix, and next year we are targeting to be around 13 to 14%. And that should positively impact our wafers business, overall margin business, because that's a trajectory wherein we have around 30 to 32% of the gross margins.
Sure. Thank you so much for that, Mr. Raithatha. Thank you. You gave us quite a lot of perspective. You're expecting 18 to 20% growth in the top line. The EBITDA should also grow by about 25% in FY26. But that's all.
That's led to a spike as far as the stock price is concerned.
Absolutely. But let's slip into a very short break. We'll get you more on the markets and stock-specific action on the other side. Don't go anywhere. Stay tuned.